Imagine a world where a humble metal, once dismissed as mere pocket change or a secondary player to gold, suddenly eclipses one of the most iconic tech giants on the planet. Right now, as we stand on the precipice of 2026, silver's total above-ground market value has just matched, and in some calculations, surpassed, Apple's staggering $4 trillion market capitalization. This isn't some abstract financial trivia. It's a seismic shift that screams of an impending crisis in the global supply chain. We're talking about a metal that's woven into the fabric of our modern existence. From the solar panels powering our green revolution to the electric vehicles zipping down our highways, and the AI data centers fueling our digital lives. Yet, while Apple's value is built on innovation and brand loyalty, silver's is exploding because the world is running out of it. This disconnect isn't just a market anomaly, it's the harbinger of a structural supply crisis that could reshape economies, ignite price wars, and transfer unimaginable wealth from the unprepared to the prescient. In this deep dive, we'll unravel how silver, the underdog of commodities, has vaulted to this unprecedented height, why the forces driving this surge are unbreakable, and what it means for you as we hurtle into a future where demand outstrips supply like never before. Buckle up, because the story of silver's ascent is not just about numbers on a screen. It's about the raw, unyielding physics of scarcity in a world that's hungrier than ever for this irreplaceable resource. To grasp the magnitude of this moment, let's step back and consider the sheer scale of what has transpired in 2025. Silver entered the year trading at a modest $30 per ounce. A price that seemed stable, almost sleepy, in the shadow of gold's perennial allure. But as the months unfolded, a perfect storm brewed. Industrial demand skyrocketed, driven by an insatiable appetite from sectors that define our era's technological leap forward. Solar energy production in China alone gobbled up millions of ounces for photovoltaic cells, where silver's unparalleled conductivity turns sunlight into power with efficiency no other metal can match. Electric vehicle manufacturers, led by titans like Tesla and BYD, ramped up production to meet aggressive global emission targets, embedding silver in batteries, wiring, and contacts that make these machines hum. And then there's the AI boom, data centers sprouting like mushrooms after rain, each one requiring vast quantities of silver for thermal management and high-speed computing components. By mid-year, whispers turned to roars as reports emerged of supply deficits piling up for the fifth consecutive year, with the Silver Institute projecting a staggering 95 million ounce shortfall for 2025 alone. This cumulative drain since 2021, nearly 820 million ounces vanished from the market, equivalent to erasing years of mining output in one relentless pull. Prices began their climb, breaking through $50, then $60, and by December, surging past $70 per ounce. Multiply that by the estimated 56 billion ounces of above-ground silver, much of it locked in industrial use, jewelry, or investment bars. And you arrive at a total valuation hovering around $4.05 trillion. Apple, with its ecosystem of iPhones, Macs, and services, closed the year at approximately $4.04 trillion. The metal had matched the machine, not through hype or speculation, but through the cold arithmetic of depletion. But why Apple? Why draw this comparison that has set financial forums ablaze and sent shockwaves through boardrooms from Wall Street to Silicon Valley? It's more than a quirky headline. It's a profound symbol of how the physical world is reclaiming dominance over the digital one. Apple represents the pinnacle of intangible value, software, design, and consumer devotion distilled into a market cap that once seemed untouchable. Silver, on the other hand, is atoms, tangible and finite, extracted from the earth at great cost and irreplaceable in its applications. When silver's aggregate value overtakes Apple's, it signals that the market is pricing in not just current scarcity, but a looming catastrophe where supply chains fracture under pressure. Think about it. Apple's worth can theoretically expand infinitely through innovation and market share gains. But silver's is capped by geology. Mines aren't infinite. They're depleting faster than new discoveries can replenish them. Global silver production for 2025 is forecasted at just 835 million ounces, a 7% drop from a decade ago, despite prices more than doubling. Lead and zinc mines, which provide 70% of silver as a byproduct, are facing their own output constraints due to aging infrastructure and environmental regulations. Recycling, once a buffer, is faltering as electronic waste streams dry up or become too complex to process efficiently. This isn't a temporary blip, it's a structural crisis baked into the market's DNA, where demand from unstoppable megatrends collides with a supply that's inherently inelastic. As we peel back the layers, the emotional weight of this crisis begins to hit home. Picture the factory floors in Shenzhen, where solar panel assembly lines grind to a halt because silver paste shipments are delayed by weeks, costing millions in lost production. Or the EV plants in Detroit and Shanghai, where engineers scramble to redesign components around silver shortages, delaying models that could accelerate our shift away from fossil fuels. This isn't abstract economics. It's the human story of innovation stalled, jobs on the line, and environmental goals slipping further out of reach. In 2025, we've seen premiums in physical markets explode, with dealers in Asia charging $10 to $20 above spot prices for immediate delivery. A clear sign that paper contracts in New York are divorced from the gritty reality of atoms on the ground. Geopolitics amplifies the tension. China, the world's largest consumer, has been quietly amassing stockpiles, importing record volumes to secure its dominance in green tech. India, with its cultural affinity for silver and jewelry and investment, has seen retail demand surge amid economic uncertainty, sucking in metal from Western vaults. Russia, too, plays a shadowy role, with its mining output potentially diverted for strategic reserves amid global tensions. These nations aren't just buying. They're hoarding against a future where silver becomes a weapon in trade wars or a hedge against currency devaluation. The West, meanwhile, sleeps on the edge of a cliff, with COMEX inventories dwindling to critical lows, forcing banks to scramble and cover shorts that once seemed ironclad. Delving deeper into the drivers, let's explore the triple threat of solar, EVs, and AI that's propelling this demand tsunami. Solar energy has emerged as the voracious beast, with China controlling over 80% of global panel production. In 2025, installations hit record highs, driven by subsidies, climate pledges, and the urgent need to decarbonize. Each gigawatt of solar capacity requires about 20 tons of silver. Multiply that by the hundreds of gigawatts added this year, and you're looking at over 200 million ounces consumed, a figure that's grown 50% in just 2 years. Electric vehicles compound the pressure. A single EV uses up to 50% more silver than a traditional car for its electrical systems, with global sales topping 20 million units in 2025. That's another 150 million ounces vanishing into automotive innards, irrecoverable for decades. And AI, the dark horse that's accelerating the crisis. Data centers for training models like GPT-5 and beyond demand silver for heat sinks, conductors, and quantum computing prototypes, where even tiny efficiencies translate to massive consumption. Microsoft and Google alone announced expansions requiring tens of millions of ounces. As AI's energy hunger, projected to rival small nations' power usage, necessitates silver's superior thermal properties to prevent meltdowns. These aren't optional luxuries. They're the backbone of our future economy, inelastic demands that won't yield to higher prices. Factories can't shut down. Tech giants can't pause innovation. The result? A supply crunch that's not just tight, it's existential. Transitioning to the market mechanics, we uncover the arbitrage opportunities that are accelerating the drain. In New York, the spot price might read $72. But in Shanghai or Mumbai, physical buyers pay premiums that push effective costs to $90 or more. This gap creates a black hole, pulling metal eastward in container ships loaded with bars and ingots. Bullion dealers arbitrage ruthlessly. Buy low in the west, ship to the east. Pocket the difference after minimal transport costs. In 2025, we've witnessed vaults in London and Zurich emptying at an alarming rate. With exports to Asia up 40% year over year, COMEX, the bastion of paper trading, sees open interest plummeting as shorts cover in panic. Unwilling to deliver physical metal they don't have, banks like JP Morgan, long accused of suppressing prices through derivatives, now face margin calls that bleed billions hourly. The Widowmaker trade, shorting silver, has claimed its victims, as inelastic demand defies traditional market corrections. We've seen flash rallies, like the $7 spike in a single day last week, driven by funds chasing the momentum. And with year-end window dressing, portfolio managers piled in, pushing prices higher to beautify their books. This isn't speculation run amok. It's the market's desperate attempt to rebalance, forcing Western prices to catch up or risk total decoupling. As suspense builds toward 2026, the emotional highs intensify with visions of what's to come. Pension funds, managing $50 trillion globally, are reallocating minuscule percentages, say 0.1%, to commodities for inflation protection. That's $50 billion flooding into silver. A market whose annual mine supply is worth just $60 billion at current prices. The mismatch is cataclysmic. Buyers scrambling for metal that's already spoken for. Vaults hitting zero and prices rocketing to ration the remnants. Analysts from Goldman to Citi are revising targets upward, some whispering $150 or more by mid-year. Geopolitical black swans loom. Escalations in the Middle East could spike energy costs, raising mining expenses and tightening supply further. The debt crisis in Washington might erode dollar confidence, sending capital into hard assets. China could impose export bans on refined silver, starving Western industries. These aren't hypotheticals. They're probabilities in an unstable world. The psychology shifts too. At triple digits, silver sheds its commodity skin, becoming a prestige store of value, attracting family offices and high net worth individuals who once ignored it. Fractional ownership emerges, with gram bars democratizing access, sustaining retail frenzy even at lofty heights. Climaxing in the heart of this narrative, we confront the raw truth. This structural crisis isn't solvable overnight. Mines take years to develop, recycling innovations lag, and alternatives to silver in key applications remain elusive. The Silver Institute's deficit revisions for 2026 will likely double, incorporating hidden military demands, Think hypersonic missiles and stealth tech, and AI's exponential growth. Wall Street's perma-bears, who preached abundance, are silenced as data exposes the lie. The squeeze intensifies in January's delivery cycle, where rational actors stand for physical, draining COMEX to dust. Banks front-run their clients, buying back at premiums to avert default. The vacuum is absolute. No sellers left, only buyers chasing equilibrium at ever higher levels. This is the wealth transfer unfolding in real time, from fiat holders to stackers. From the complacent to the vigilant, governments may intervene with probes or margins, but they can't print silver. The fire rages, and silver is the alarm blaring. In a satisfying resolution, we turn to you, the viewer, armed with this knowledge. Don't sell into dollars at the first peak. That's trading scarcity for inflation's erosion. Instead, master the ratio trade, monitor silver to gold, holding through 60.1. Trimming at 31, swapping fully at 15.1 for dynastic preservation. Accumulate now while the window narrows. 2026 dawns as the year of the silver phoenix, rising from depletion's ashes to redefine value. You've witnessed the match, silver equaling apple, not as an end, but as the spark igniting a new era. Stay vigilant, stack wisely, and ride the wave. The crisis signals opportunity. Seize it before the vaults echo empty. Thank you for staying with me till the end. Here on The Scope, we dig past the headlines and uncover the hidden layers history tried to bury. If this documentary made you think differently, hit subscribe. Your support tells me to keep creating deeper investigations. Share this video with someone who loves powerful untold stories, and leave your thoughts in the comments. I read everyone. A new, even stronger documentary is already on the way, so stay curious, and I'll see you again soon, right here on The Scope.